Gujarat Chamber of Commerce and Industry. Grow business. Transform Gujarat.
I would start with some questions that what are the key financial challenges that you see being the developer or an IPP and to achieve these RE targets. So if you start with Pius.
Yeah, good afternoon, everyone. I'm Pratyush Thakur. I represent Blueleaf Energy. We are an IPP, and we are owned by Macquarie, which is one of the largest infrastructure investors in the world. Now, in terms of challenges, the simple challenge is we need a lot of money if we have to achieve any targets. Now, targets are floating. Of course, the government has set up a target of 500 gigawatts by 2030. I am able to place a bet that it will not happen by 2030, but it will happen. But even if, let's say, we have to get to 300 gigawatts by 2030 from the current 150 gigawatts, we need roughly $125 billion of capital to come. How much are we investing on an annual basis? Last year, 2024, was the highest year of renewable energy deployment in the country, with about 21 gigawatt of solar and 3 gigawatts of wind. That would have taken about total investment of $12 to $13 billion. That was our peak, which we've done so far. To reach 500, we need to do 50 gigawatts a year. That would need about $40 billion a year. So the sheer amount of capital required is tremendous. And we all know that that capital has to come from various sources. Our fiscal capacity is limited, and we know that the government cannot invest that capital. So that capital has to come from the private sector. Mostly the renewable energy projects are developed with a combination of equity and debt. Equity is about 25% and debt is 75%. So let me start with equity. Equity, the good news is that most of the local conglomerates are in the business now. Name it, Reliance, Tata, Birla, Adani's, all of them are focused towards investing in renewable energy. That's great news because that is the real capital generation which will happen from the country itself. In terms of external equity, most of the major funds are here. The funds could be private equity funds, infrastructure funds, sovereign funds, pension funds, all of them are here. So in terms of the breadth of capital on the equity side, we are doing pretty well. We've got everyone excited, but the challenge there is that post-COVID, US dollar treasury is trading at about 5%, say between 4 to 5. So pre-COVID, we were able to justify a 12% INR return on solar. That is not justifiable anymore. For any international investor to invest in the country, they need to see double-digit US dollar returns. And I'm being really kind by saying double-digit and not mid-teens. Because I talk to investors day in, day out, international investors. In their view, the amount of risks which these projects carry, the return should be 12 to 15% dollar at least. But we are not there. So that is one problem we have, is that if we have to attract a lot of foreign capital, we'll have to somehow create returns which are attractive for them. And for that, there are only two ways. Either you increase the revenue or reduce the cost. So for increasing the revenue, we've seen at least some rationalization happening on the tender side recently. The prices have not crashed, or maybe 2.15 was an aberration. But prices have stayed strong in the tenders. But what are we doing on cost? The cost has just gone up. In the global market, while the module prices are going down, in the Indian market, module prices are only going up. And I know there are several aspects on it, on being self-dependent on manufacturing. But if you just look at the commercial attractiveness of Indian projects, that does not support the case. So that's the challenge we have on the equity side, is to show considerable returns to equity investors. But the biggest problem lies in debt, where we are primarily dependent on the Indian banking and non-banking system. We need $40 to $50 billion of debt to go in renewable energy every year, and I don't think we are doing even more than 1/10 of that. So to sum up, the biggest challenge is the sheer amount of capital required. We need to broad base the type of investors who bring that capital, and need to create an ecosystem which gives them the right kind of return for the risk involved in the projects.
I mean, is there any other innovative financial scheme like blended financing, such financing? Do you see this is coming into market?
What financing is that?
Any blended financing?
So innovation, of course, is important and is there. I can name at least, I have experience of doing one myself. So last year we got project finance for a project we did not have a PPA at all. So we got a merchant project funded by an Indian private sector commercial bank with some structuring which we did. And I can go into detail on that. But good news is that yes, the banks are looking towards innovation and different structures. If you go to, say, bonds, green bonds, bonds itself has been a challenge for us. The bond market has been a laggard forever, since the time I have grown up and understood it a little bit. The government has been doing a lot of work in making bonds attractive and also green bonds attractive. But globally, and you would know this term, Jyoti, there is no greenium, right? There is no premium. Ultimately, the green has to stand on its own legs in terms of providing the right kind of risk protection and the returns. So we all know on the policy side, and I can go on and on what's happening on policy side. We saw in the initial addresses as well, there are several measures which are, to sum up, confusing. But the reality is that ultimately, when an investor, whether it is equity or debt, they invest capital in a project, they want risk reduction and return increase. And if we are able to provide that, if a renewable project is more competitive to a coal project, of course it will sell.
Wonderful. Thank you. Bimal, any lights on the challenges that you are facing from the financing side?
Yeah. Thanks, Jyoti. I would like to thank ICC and Gujarat Chamber of Commerce and Industry for inviting me for this session. I think my name is Bimal Jindal. I'm heading project delivery for Gentari India, which is part of Petronas Group. I believe Pratyush has, yeah, so is it, no, I think.
There's an echo on the mic.
Is it better? Yeah. So I think Pratyush has, covered most of the points. Having said that, if you go for financing, the lenders always look into what is the credit worthiness of your PPA. The offtake is one of the major challenges. So if you're talking about 500 gigawatt by 2030, it does not, or it cannot happen only from the utility bids. It need to happen at all the fronts, at the CNI, at the rooftop, everywhere it need to happen, right? If we look into the major growth or the major segment, if I even talk about the last year, which was the substantial year, doing, between 25 to 30 gigawatt of solar first time, it was driven by the utility scale, where the lenders are, more aligned. They understood the large scale utility PPAs. But if we talk about the CNI segment, that is not having that kind of value or credit worthiness for the lenders. So that is one of the major risks. If we want to grow, the industries are today, again, if we look into paying heavy price, they're trying to move from, the conventional fuels to renewables, but they're not able to move because I will not quote, even if you talk the biggest industries, you're not getting the same rating as you get it for the central PSU utility PPAs. So this is one of the big challenges. These industries can give you maybe 10 to 15 gigawatt a year, but they're not able to penetrate to that extent because they don't want to spend that kind of money. They always look into if they want to put more equity in the RE, or they will put that equity into the business where they can generate more revenues and more profits compared to what saving they will get from the RE. So that is, I think, one of the big challenges apart from what Pratyush said. The second issue which is there, I think the interest rates are fluctuating a lot post-COVID. If you look into, even so far is again, I think slightly cooled down now, going up to 6.5% to now coming close to 5%. So this fluctuation is again impacting the financing in the Indian sector. The Indian PPAs are having revenue in INR. Your production is also happening in India. Your consumption is also happening in India. So if you try to borrow money from outside, the interest rate fluctuation plus the hedging, like the way USD is fluctuating recently, it's not aligned with 2.5% annual depreciation which has been projected. So that is also impacting the way people used to think for financing. Now, if you want to do a $40 billion investment and $30 billion need to come from financing, our Indian system is, I think, also not geared up to disperse that kind of funds. It was, if I talk about few years back, it was very slow on the Indian lenders. I think after the government stepped in, they tried to push everything. The people, the Indian lenders typically pitched in, they try to take now major pie. I remember, we used to get it funded from OPEC or, Europe or, from different countries, right? So it was not happening. So this is also impacting. The another thing, when you talk about the financing, the connectivity is also one of the issue, which I believe, not directly linked, but definitely the lenders are always interested when you are going to commission the plant. Even if you deploy your funds, everything go as planned, you construct the plant, if the connectivity is not there. And when I say connectivity has two parts, right? One is on the GSS side, another one is on your PSS and line side. Even if you try to take control of that, the GSS, the timeline which is there, it's not happening that part. We are not still, there to have 250 gigawatt of additional or 300 gigawatt of additional grid to meet 2030 deadline. If I want to apply today a connectivity, I'm getting dates anywhere in India. I'm talking ISTS, CTU, not the state grids. We are talking about somewhere 29, 30. There's no connectivity, right? When the lender talks about he look into everything is good, the plan is foolproof, there's no connectivity. So they also look into that, right? And that also impacts the way they want to fund it, the condition change, right? So there are multiple factors, but I think while we look into those sides, we need to look into that, from a 10 gigawatt, we have grown to 25 gigawatt also a year. So we are able to push. The concern is that this cannot come alone from solar. While solar is gearing up, the battery is again cooling up, the wind is still a matter of concern. You cannot put, 200 or 300 gigawatt of solar alone into the grid, right? If we look into the wind is not able to ramp up. And without wind, you cannot make a sustainable grid. So the wind's execution, if I look into, it's slightly under 3 gigawatt a year, right? It cannot match what you want to do, the solar cannot. And the batteries just started picking up now. So we need to see, so the lenders are looking into, when we talk about FDRE, RTC bids, they're also looking into how we can commission within those timelines and how all the things are going to come into play. Yeah.
Thank you, Bimal. And do you see any progress or movement on investment into grid itself? Because very interesting point you talk about, even the project financing is ready to be invested, but for them it's like a block fund. They can't generate the revenue because the plant is not commissioned. Do you see any investment, for example, active grid or smarter grid? Active network management is one of the interesting mechanisms that has already demonstrated successfully enabling more RE power to penetrate within the existing infrastructure. Because if you're talking about infrastructure into grid, new investment or new grid, that's long-term, but a huge investment is required. But do you see any grid improvement, smarter grid improvements to enable more power?
So I think, one good part I must appreciate, there are regular meetings being led by CA from all the developers. They started taking these plans, how many gigawatt each developer want to do. They're taking their commissioning timeline and they're trying to realign their commissioning timelines to meet these targets, right? So it's a good initiative which is already started, I think, for maybe last 2 years, 3 years, but it will take its own time to implement, to reach to the speed which we're looking. I'm not saying, it can't reach, but I think the 2030 target may be, slightly aggressive to meet, keeping all this in mind, but there are definitely investment focus on the grid. The way government is driving, they understood that without grid, this target cannot meet, right? And the investments are happening in this grid part also.
Wonderful. Thank you, Bimal. And related to risk of investment, I'll come back to you. What are the bankability factors lenders, funders are looking at?
Yeah, so for financing, as Bimal said, the first one is offtake risk, where the mainstay of development in the country has been these tenders floated by SECI, NHPC, and the likes. But recently, lenders have also got comfortable with CNI, PPAs. I remember 3-4 years back, we were trying to raise financing for a CNI portfolio, and not many lenders, except the power sector focused lenders, were ready to look at it. But today, NBFCs, local banks, international banks, all are funding CNI. Where it is becoming more complex now is the exposure to market, where you don't have a fixed revenue under a contract. And that merchant exposure is also being evaluated by lenders, and they are getting comfortable with it. So there is good news that lenders have taken a more flexible approach on offtake. But that's one of the biggest risks they evaluate. But something which is less than 5% of cost and 95% of problem for everyone is land. And lenders are extremely focused on looking at the overall land acquisition progress, and they would want ideally 100% of land to be done before they disburse the monies, but that never happens. So they take a position of slightly lower levels, 50, 60, 70% of land. But significant progress on the land side is important. Clear pathway to getting grid connection, as Bimal mentioned, before the commissioning schedule is very, very important. And there, if there are potential risks on delay in the substation which PGCIL is building, or any upstream transmission network, that's also a risk they're focused at. Finally, on the execution side, what has happened now is that, at least in the solar sector, reliable EPC contracts are not a norm in the projects, where many a time IPPs themselves undertake the engineering, procurement, construction works. So the capability of the IPP on delivering the projects is also one of the key risks they evaluate. And finally, on the module side, now there's not a lot of options left, but still they would look at the supplier of the modules. So that's on solar. If you look at wind, other than what is relevant for solar, in wind, the overall methodology for forecasting wind generation is a question. And we've seen across years, the wind plants have performed not more than P90 on average, while you should perform on a larger base, there should be P50 generation. So the wind energy forecasts are a big concern, where they evaluate that very carefully. And then on the wind execution side, the risk is that 4 or 5 years back, until we had a feed-in tariff scheme, most of the times there was a turnkey EPC contract provided by the OEM itself, which reduced the risk for the projects, which is not available anymore. So on the projects now, the risks are much higher, and overall structuring of contracts and the project management on the wind side becomes a very important risk to evaluate for the lenders.
How badly do we need international investment?
How badly do we need international investment? We don't have that much money in India, so we do need international investment. And that means that we need to create structures and ecosystems which give confidence to international investors. As earlier Vinay mentioned, the whole renewable energy tendering scheme has been a big success for India, which has attracted a lot of capital. But we have still under-delivered on the potential. And one of the biggest reasons on that has been lack of policy certainty. And we can go on and on about how volatile the policy has been. But one of the things which the investors like is a clear pathway. If there's a tax, there's a tax. But you know how much would be the tax, how long will it apply, and is there a sunset date or not? We have generally not delivered on all three, where the taxes have been announced. Let's take an example of what's happening on the module side. We all know that BCD was introduced on modules, 40% duty, and that is now 20 plus 20, but effectively 40% duty. But at the same time, you can't import modules, because there's a list of module manufacturers which does not include any international companies or any international makes. So there are barriers not only on the duty side but also non-trade barriers. Now let's say I'm buying from Indian manufacturers, which I'm very happy to buy. Within last 6 months, there have been 2 anti-dumping duties on the upstream value chain of modules. And we don't know how many more will come. So the point is that if I am a project developer, either an equity provider or a lender, I don't know what will be the final cost of this project in next 6 to 9 months. And who's bearing that risk? So ultimately, we need international capital to meet the needs of our country and the world on mitigating the climate crisis. But for that, we need to provide some sort of stability and certainty on the policy side.
Clearly, uncertainty is one of the biggest questions investors ask. And yes, they don't really mind what is right. The definition for them, right or wrong, is very subjective. But what they don't like is uncertainty in the process. Do you think, Bimal, this uncertainty is one of the reasons causing, Pratyush, you mentioned about IPPs becoming EPC. Do you see international investors seeing that as a risk because there is no contractual risk mitigation measures there, it's all in-house? Do you see that's one of the risks why international investors are not interested?
Yeah, so, again, I think it has its pros and cons, right? If we look into the Indian market, let me talk first on the solar side. The kind of companies who are pushing initially at the solar side, the big brand names, who are the heavyweights, doing gigawatt scale, now they're no more. Their new companies are emerging. If you talk about now the single project of solar is talking about 500 megawatt to 1 gigawatt. So that means you need a working capital. The smaller EPCs, while they can do it, it's more of a manpower labor. It is not that simple, right? It needs a robust project management and a capital management, because the cash flows don't flow the way you plan, right? So that liquidity is not there with these companies. So the developers are analyzing, and I'm not saying, I've always been in favor of having some specialized EPC. Whatever, 7-8 gigawatt I done in India, always done by the big EPCs. So some of the EPCs took I would say the developers took a call where they try to get into, but then they build the teams. The teams are not like 30, 40 people. They are building up a team of 300, 400 people. They understand that, right? I think the lenders are comfortable with that. The concern when we talk about on the financing side, the uncertainties are many, right? Pratyush was mentioning on something, the taxes, the price will change. But I have another issue, change in law, right? If during execution any project got some additional duties, which has happened in the past and it's happening now, you cannot get that money from the lender immediately. Now lenders are flexible. Previously, I know that in one of the projects when SGD came, I need to pump in, $20-30 million to get my modules, out of the port. Now, if you put that kind of money, your project IRR are gone for toss. The projects are no more viable. So if the lenders are trying to now put all this risk with the developers, if this happens, the initial equity pumping need to go from the developer. That is impacting the developers to calculate their risk, right? The IRRs are getting impacted. So now the lenders are trying to rationalize this thing. The kind of disbursement, the gap you will have is also become sometime an issue, right? So we need to see how this happens. The second issue, which I see, from the risk perspective with the change in ocean, India did 25-30 gigawatt of solar last year, right? Slightly under 30 gigawatt. Now we're talking about making cells in India. I'm always vocal about, we need to be self-reliant, independent, and not, relying on our neighboring countries. But let's look into the factual check, right? How many suppliers can give you credible solar cells in India? I will not go with the, nameplate capacities. I can tell you it's a single digit, very low number. So you are, pretty far off what you want to achieve, right? It's contradicting. Now lenders also understand that. Now I think they're still becoming flexible on the Bloomberg side, but they still try to look into. The second is the efficiencies and again the performance. No one has deployed, that gigawatt scale modules and seen, how they've gone with some of the solar module guys, right? There are so many solar module companies are coming. So we need to see, how that goes well with the lenders. So we need to look, I think, Pratyush has covered most of the part. Another part which, if I look into the wind side, there are not many major EPC companies who can do your complete turnkey solutions. That is one of the reasons in the wind side we are lagging a lot.
Gujarat Chamber of Commerce and Industry. Grow business. Transform Gujarat.